Well, glad to have you back with us. I'm Marlin Bohling, your tour guide to the ag commodities, and let's dive into these prices here with our quotes provided by Bar Chart. Okay, we'll start off with the corn market here, and right now we are trading lower by 3 3/4 cents on the nearby July. However, December new crop is now a half-cent higher at 7.21 as we start to see some bear spreading evident here. We had a high of 7.28 3/4 in that December overnight and really backed off away from it, but it has come off of its earlier low by about 3.5 cents right now. Then you get to the soybeans. They have really gotten after the soybeans this morning, but they are also coming off of their earlier lows from a little bit ago. July soybeans now at 17.21 per bushel. That's down 24 1/4. But it's about 10 cents off of its earlier low. November soybeans down 23 cents at 15.45 1/4 right now. And on the wheat market, you know, we had the wheat market showing some pretty strong gains in the overnight trade. Right now, they're a little more timid. July Chicago wheat at 10.73 would be 2 1/4 higher. It has come off of its low, though, by about 9 cents. In Kansas City wheat, let's go to July over there, and we have July trading 4.5 cents higher at 11.67. But it had a high of 11.83 in the overnight trade, so keep that in mind. Now let's go to the spring wheat market in Minneapolis, and here we have July just 1 tick higher, 1/4 cent higher at 12.21 3/4. Meanwhile, you look at the cotton market on July, and we're now 26 points higher at 145.32, but all the other months are a little bit weaker. December down 30 points as we speak. Well, I want to also take a look at the Dow Jones Industrial Average here and see what's going on there, because we had a big drop this morning. June down 736 points at 30,652. My guest beside me, Mr. Chris Swift of Swift Trading, informs me as he comes onto the set that he says, well, it was down about 800 points a little bit ago. So let's talk about that. Mr. Swift, how are you?
Yes, sir. I'm doing great. How are you this morning, Marlon?
Thanks for joining us here on set. Okay, so what's the story here? A lot of pressure on the equity markets. Is that going to translate into any support for the ag trade or not?
Well, I think support, probably not. But what we're looking for in the grain market is just marking time. Every Sunday night, Monday morning, we come in here and there's no dramatic losses at all, and down 20 cents on beans, yeah, but we're still flirting around with contract highs. Same thing in corn, some contract months up, some contracts down. This is a marking of time. We got through Friday's WASDE report. Everything showed just about the exact same numbers of the carryouts from last year, and the upcoming carryouts, they're all pretty much stayed the same. So notice that we're not going down on those numbers, so I think we're just marking time until we get a little bit better improvement on this year's crop.
So do you think the selling on soybeans right now is kind of a one-off type thing?
It's probably just there wasn't anything that came out over the weekend that was very supportive towards it, and if we get into today's crop progress report, probably you'll see the actual indicators for the crops in very good shape. But as we go to the July 1st planting intentions, some will say, you know, we put out a few less acres of corn, and those fewer acres went into the beans.
And we're getting pretty close to pollination time, aren't we?
Yeah, it's, well, we're still quite a ways. We're still several weeks out.
Well, I mean, relatively speaking.
Yeah, as the crow flies.
By the time you get to July 4th, I mean, we're going to be right there.
There's going to be some of it that'll already be tasseling.
Yeah. Drove by some corn this morning when I came into work, and it was like this high.
Wow.
And I mean, if I'm standing up. All right, we'll pause right here, and we'll come back and take a look at this livestock trade with Chris Swift right after this. I want to take a look at the U.S. dollar index as well here this morning to see what's going on there with the Dow down 700 points. The dollar index is going up 634 points. It's going the other way. June futures at 104.785. And we have been keeping a close eye on what's going on with the energy markets. Crude oil slipping away today. July down $1.53 today at 119.14. Well, now let's examine our live cattle market. Wow, all kinds of pressure across the board. Everything over $2 lower on the live cattle. And we have August. Let's focus on that. It's down 240. Whoops, now down 230. 133.90 would be the last trade there on the live cattle. But as I say, just about all the months over $2 lower now. Feeder cattle, yikes, August down 355, Chris. We're at 170.92. Let's stop right here on this one. It had a high of 173.75, and now we're back down to 171.07. What is going on here? The corn was lower.
I think it's a full convergence of basis going to take very quickly.
So explain what that means.
All right, so we've been trading the futures market premium to the cash market for months on end. Now we're getting to a point where there's a lot of new sales coming out for feeder cattle, and there's not as many cattle on there, so some of these feed yard guys are bidding the market up a little bit higher. Except we see in the future that with really high feed costs and really high input costs that it's going to cost a lot to feed those cattle, and it will be literally impossible to break even on them. So the futures market, foreseeing that, starts down. The cash market's still up because everybody's wanting to own this inventory that's now been made available. So you get a swapping of the basis from negative to positive.
What about all this heat? I mean, how's that going to impact our cattle trade?
It's worse. It's throwing more cows onto the market. And I saw a chart this weekend that showed an extremely elevated cow slaughter that has been for months on end. So all that would really do is just throw more cows into the slaughter mix, which right now is masking a pretty big shortage of fed steers and heifers. So
it's going to be pretty critical, I'm afraid, this week, especially with the heat, the temperatures, the way they are, and the humidity, to have everybody make sure their generators are running. If you have confinement animals, could be poultry, could be hogs, could be some dairy cattle or what have you, that could be extremely hazardous on those livestock.
This is not going to be an easy time for them.
Yeah, exactly. All right, now let's take a look at the lean hogs. Let's bring those up on the screen here and see what's going on there. On the lean hog trade, we are mixed, but mainly weaker. We have June 7 higher. I think most of your action, though, was in July, and that's down $1.10 at 104.37. Do you see anything happening here?
No, I think the same thing with the fat cattle market and the hogs is probably consumer demand. We all know that discretionary dollar is being stretched, and unfortunately, meat proteins tend to be something that we cut back on when we have to go to our necessities.
Okay, well, Chris, thanks for coming in.
Absolutely, Martin.
Always a pleasure on Monday.
Same
Appreciate
here.
it. Look forward to Chris Swift of Swift Trading. Well, let's look at our markets. Janet, back to you.